Welcome back to the FTF Exchange Podcast. I'm your host, Maureen Lowe. I'm the president and founder of FTF and publisher of FTFnews.com. We're talking again today about AI, but from a perspective of what are the risks if you don't use it. So, any skepticism, any foundational questions you still might have about AI, we're going to table those for now. So here's the thing. If your leadership team and you are stuck on the why we should not adopt AI conversation, I'm here to say whether you like it or not, you're probably missing the boat. It's clear that the efficiency gap between firms who have adopted AI for their operations and the ones who are still hesitating isn't getting any smaller. In fact, it's getting wider. And so is the cost of that gap in efficiency, in risk, and in competitive disadvantage. So today we're speaking with Toby Glaysher. He's the chairman of Finbourne Technology and the 2025 FTF News Award winner for the best data management solution. Toby is here to help you understand why the real risk isn't in adopting AI, it's in the waiting. He has spent his career moving big ops teams from total inefficiency and escalating costs, so he knows what works and he's proven it. And today he's bringing you your AI life preserver. And here it is. The cost of doing nothing is much higher than the cost of moving forward. So if you want to be standing on the dock as you watch your AI sailboat cast off with all your friends aboard as they wave, smiling at you with their fancy cocktails and their little umbrellas, then you don't want to miss this episode. So welcome, Toby.
Thank you. What a great introduction. I've got a great visual now of
There you
the
go.
cocktails and the dock and the boat.
Right? Wouldn't you rather be on a sailboat with your happy with your drink?
I would rather be there if I wasn't doing this podcast.
Good answer. That was a trick question and you passed. So I know you've managed big ops teams, but it's really more like massive ones. When you were at Northern Trust, you managed what, 7,000 people, which is an absolutely phenomenal number in itself. But 6,000 of them were in the ops department. And that doesn't sound really more like an ops department. It sounds more like a small ops city. So what did your day-to-day look like?
A lot different than it does today, actually. Yeah. So my day-to-day, week to week was I usually averaged about 14 meetings a day. My day would start at about 5:30 a.m. because I was global and managing teams in Australia and so on. And pretty much every other week involved a long haul flight to somewhere.
When did you actually get work done? It's a lot of meetings.
It's a lot of, well, that was the fun bit.
Okay. So actually, in a recent conversation, we're going to dive right in. You mentioned that it isn't about whether adopting AI is too risky anymore. It's now a matter of what are my risks if I don't? So what did you
Yeah.
mean by that?
So, and that's a great question. I can unpack that a couple of different ways. And so risk comes in different forms. There's operational risk, there's financial risk, there's credit risk, et cetera, et cetera. I would say that the primary risks that people need to think about when they're evaluating AI are very much around operational risk and then financial risk. These are the two key components from my point of view. And underpinning all of that is data risk. Okay, which is essential to any aspect of AI. And for me, what I've learned through experience of when you get AI right, and we should probably spend a minute or two to define AI or the context in which we're referring to it at some point. But when you get AI right, it is less risky in terms of the accuracy of what it does. So it is a lower risk from an operational point of view. And it also reduces your financial risk because you make less errors, you've got less compensation to pay, and it costs you less money to perform the tasks in the first place.
So then is the real risk in the hesitation of not adopting AI?
I absolutely think so. Now, how you adopt it is pretty critical. So I'm not a subscriber by any means to unconstrained AI adoption. And as I said, I think when we're talking AI these days, most people are referring to LLMs or large language models, as opposed to the machine learning or AI version 1.0 as it was. But yeah, I think if you do it right, it reduces risk. It doesn't increase risk. And I think the starting point comes from, and I don't mean this in a negative, pejorative sense, but it comes from ignorance. And so if you don't really understand something, you're probably going to fear it. And so really the starting point for me around AI education is actually understanding it and getting to know it and understanding what it can do, what it can't do, and how to harness those LLMs and how to deploy them in a way that reduces risk rather than increases risk. I'll give you a use case from my prior firm where we created a fund accounting agent. Fund accounting, we go and look at investment portfolios, we value those portfolios, and based on those valuations, people invest and divest in those portfolios. And if we get that price wrong, we are going to generate a financial loss either to the buyer or the seller of those funds. So it's a really critical function. It comes with a lot of financial risk. And as such, we have a lot of humans that perform those tasks, a lot of systems that help us do that work. And when we introduced fund accounting as an AI agent, the first version of that, we had a lot of pushback from our centralized risk teams and our compliance teams who said, "Oh my God, you're using AI, that's risky." And we said, "We thought you might say that." So we've taken 12 months worth of fund accounting data and we've run it through our AI fund accounting agent. And guess what? It found 200 errors that the fund accountants, the humans, didn't find. So this agent is finding things wrong that your people are not. So now where is the risk? Using it or not using it?
So that was your mic drop moment, Toby.
It was pretty good, actually, yeah.
So when the virtual fund accountant found those errors, did it find that it was one big error, or is it a set of smaller errors that add up?
They were small. Thankfully, so they didn't cost a lot of money to correct, or they didn't need correcting because they weren't material. But we have a saying in operations and fund accounting, which is small NAV errors become big NAV errors over time.
Okay, so let's back up for a moment. You said you wanted to define what we're talking about as an AI in terms of this conversation. So why don't you go ahead and do that, and then we'll continue on.
Yeah, because it's become a sort of like AI could mean a lot of different things.
AI acronym soup.
To large language models. I think the real deployment of AI in its most purposeful way in financial services, in operations, in middle office, back office, and so on, is AI as an agent. And that's when we put together a large language model and potentially some machine learning and other tools such as APIs. And we create a multi-step process and we have agent-to-agent functionality and orchestration, and we generate autonomous results. So when I say autonomous results, we actually create executable actions. So the AI becomes determinative rather than predictive, and it's something that we can rely on and use usefully and productively.
So then the $1 million question that we keep hearing in the various interviews we've done and from our readers is, where do they start? Where do you recommend firms start?
Data. So
always comes back to the data.
Yeah, which I'm a bit of a geek, so I love data. But
so do I. Ask Sarah. I'm a data geek myself.
I don't know whether it's still true, but a couple of years ago, I read a study from McKinsey that said that 80% of the spend on AI projects is actually going towards data preparedness.
So what are they spending that money on?
Well, to make your AI have a chance of being effective, you need to have good quality data organized in a way that it can be deployed and read and passed and used, and that you have certainty over the content of that data. You understand the lineage of that data, and those are essential ingredients to be able to deploy AI and AI agents effectively.
So, what happens if a firm then maybe rushes into an AI project too quickly? I know we talked about so many firms now feeling squeeze and pressure for cutting costs and doing more with less. So, say they're feeling the pressure to adopt AI to maybe solve some of those problems. What are the risks that they would encounter by maybe not making sure their data was in proper place? But then on the flip side, what's the risk of maybe continually delaying the AI implementation because they're waiting for that perfect data?
Yeah, and I don't think getting your data organized is equivalent to perfect data. The day that we get to perfect data, well, I'm looking forward to having that problem. I haven't reached that point
I'm sure you're not alone.
yet.
Yep.
But a common feature of these complex financial services, asset management, asset servicing, and so on, is that we have data in lots of different places, and we end up with lots of different versions of that data. And so, if I have my accounting book of record in one place and my investment book of record in another place and my custody book of record in a third place and my performance in a fourth place, the chances are that I've got a version of the transaction 4 different times. I've got a version of the security master 4 different times. I've got my positions 4 different times. And so that leads to divergence in the data. And so when you want to run your AI agents, you need to have data that is consistent. And I know when I'm performing that task, this is the master source of my data. So getting all of your data into a single place where you understand which is the single source of truth around that data is really a first step to being effective.
So our chief content officer was at an event recently when he spoke to a few people, and they said that they had rushed into AI and without the proper prep or training, and which sounds like just a recipe for disaster
Mm-hmm.
to
Mm-hmm.
me. What are the risks that they're exposing themselves to?
So, right. When we say risks, I would say, if depending on you know your level of sophistication, the biggest risk for the uneducated novice around AI is exposing your data, your client data, your proprietary data to LLMs in a public space. Yeah,
Mm,
the number one thing that you have to do is to protect your data and to make sure that that data is not getting into the public domain, that those LLMs do not have access to retain that data, to train on that data, and that you're not in danger of breaching confidence or IP around that data. So for me, when I think about the guardrails that I want to see in place, the number one thing is that anybody working on AI and LLMs is unable to access client data that they're not permissioned for, and they're unable to put that data into the public cloud.
okay. So in your experience, what do you feel firms think they need from AI that maybe they don't actually need yet?
So I think if people are clear about what they want and need from AI, they're probably already in a pretty good place relative to some others. I think the biggest issues for those firms where they're saying, I'm hearing all this good stuff about AI and it's going to be transformative, and I'm worried that I'm going to miss the boat. But because I don't have, talented, super educated AI team or head of AI, I think that by handing out 1,000 Copilot licenses to my team, that this is suddenly going to be transformative of its own accord. It won't.
So we're going to talk about the employment, gorilla in the room a bit later in the conversation. But do you recommend then that firms have a head of AI now, or are making the right steps to train staff in order to be able to use it, trust it, implement it,
And to be safe. Yes,
and to be
absolutely.
safe.
100%. Yeah.
Okay, so Toby, say somebody was sitting with you right now, some C-suite of some hedge fund, and they tried AI and it failed. And now they're dealing with what I call PTAISD, so post-traumatic AI stress disorder. What would you say to them right now that would convince them to try again?
So okay. So when we say they failed, my experience in this space is not that it caused some catastrophic failure. Um, it's normally that it massively underperformed their hopes or expectations. Okay, so they go, there's all these AI expectations. Everyone tells me it's going to be transformational. I'm going to get some AI people. I'm going to do a proof of concept. I'm going to put a project together. And you send your team away and you spend some money on it and you come back and you are underwhelmed by the results. It's kind of like, that's all I got.
Now, what do you
I mean,
think happened that would
it might be
underwhelm?
nice, it might be interesting, but that didn't transform anything.
Right.
Probably because somebody said, well, we can't do that because it's too risky, or
Mm.
we can't do that because we can't be sure of the results, or yeah, it gave me some interesting research, but I had to double check it with humans, four eyes checks, whatever it was. And so my experience is not so much that it failed, it's more that it was underwhelming.
And underwhelming because maybe they didn't implement it fully because there may have been some apprehensions around risk and compliance.
Yeah.
Not that it wouldn't have worked if they went all for it.
Correct.
Then Toby, back to the employment question that everybody wants to know about. Is AI responsible for getting rid of ops jobs?
And the shorter answer is yes, undoubtedly. The longer answer is considerably more complex and nuanced. And I'm going to go back in time a little bit here because I've been around a lot and I've seen a lot of transformational automation come into the industry over the 35 years that I've been in it. And so, when I started in this business, we were still getting telex instructions and fax trade instructions, and we didn't even have personal computers. And there have, not that we really think of it, but there have been some tremendous shifts over time in terms of the automation that we've benefited from. Things like the introduction of the Swift network and getting asset managers onto the Swift network and so on. And what I would say is we are massively more efficient today than we were 10, 20, 30 years ago. And yet there are many more people working in this industry than there were 10, 20, 30 years ago.
That's a
And
great point.
so, yeah, we've got a long track record of automation. Yeah. And what it does is it makes us a lot more scalable. It makes us a lot more efficient. It reduces the cost of investing, which benefits the pensioners and the savers for whom we do this work. But it does change the nature of the work. And so the efficiency will generate massive economic growth, which will make us all richer. There will be more assets to manage, more wealth to manage, and we will be able to do so on a much more scalable and more efficient way. Will there be short-term job dislocation? Absolutely, no question about that. But I would venture that, again, in my more recent experience, that it was probably getting harder and harder to find people who actually wanted to do some of these jobs. Sitting at a couple of screens and running a report and then putting some data into a spreadsheet and running a calculation and then going
There just
back to a
aren't enough
different
nerds
screen.
around like us, Toby.
It's not the most fulfilling work, if I'm honest. And it was becoming increasingly difficult to recruit in those areas. Whereas I think, being an engineer in the AI space, well, for me anyway, is a far more interesting piece of work. So, yeah, there will be some short-term job dislocation for sure. But I think longer term, we've demonstrated economically that automation leads to greater wealth, leads to greater employment and better employment over the long run. for sure. I think the probably the bigger impact in terms of job losses is going to be in the coding community, to be honest. I'd say
Why is
that's going to
that?
be because the quality of the code generation that we're seeing in some of these LLMs is astonishingly good, and our best engineers and coders now are able to get like 10x productivity by getting the basic coding done for them by these AI agents.
So, in addition to that, when we were speaking earlier about why, an AI project might not have worked and it was not a full implementation and maybe the risk and compliance departments pushed back. So, are in addition to AI developers and engineers, are other departments growing like risk and compliance to ensure that when a firm is adopting AI, it is being done right? I know we also spoke with a woman from TIAA CREF who was embedded in a new AI program, and they were even recommending having their own AI compliance department. So is it also other departments are growing rather than
Yeah.
maybe decreasing?
Well, actually, there's a huge efficiency to be gained in risk and compliance through the use of AI. And it's something I'm a very strong proponent of, because I think if you can actually get the very teams that often oppose the deployment of AI to become knowledgeable themselves and educated in AI through the usage of the AI, and to experience firsthand the potential of that AI, it goes a long way to adoption across the firm. And to give you a more practical example, in the asset management space, most of the mandates that we manage, whether they are mutual funds or individual investment accounts, have investment restrictions around them. And these can be very complex documents. A complex mutual fund might have a fund prospectus that stretches to 150 pages and different sub funds and 15 different share classes and currency classes and so on. It takes weeks to set up a fund like that if you do it manually, and it can be incredibly risky if you get it wrong. Okay, we've built a fund setup agent that can take a 150-page prospectus and turn it into a 1,000-field fund in 3 minutes with an accuracy rate of 95 to 98%. We can use that same agent to go and look at all of our fund prospectuses and compare it to how the funds are set up today. And that'll tell the compliance team where they've got potentially non-compliant setups. It'll show the risk team where there's future risk potential because they've got the fund set up wrong. And so these are tremendously powerful tools that will enable us to do much more accurate qualitative analysis around compliance and risk, and have much greater certainty around that, and at much greater pace, which will improve the speed to market. It will enable investors to look at funds and get the answers they want very quickly. So instead of having to trawl through a 150-page document to find the bit of information that you're looking for, you'll just be able to go into the fund agent, type in the question, and get the answer.
And I want to shift the conversation to what's happening in the market right now, because complexity is exploding in certain areas, in particular the private market sector. So with that and other new instrument types, what are the operational risks of not using AI?
Yeah, well, you're going to make more mistakes and you're going to have a lot more people doing it. And it's fascinating, actually. The private markets represent a massive opportunity relative to the public markets. And when you think about it, you step back and you think about it logically, it makes complete sense, because people investing in direct real estate or in private equity funds, or private equity funds investing in underlying companies, this is very slow capital in terms of its deployment. Yeah, it takes weeks and months to negotiate these deals, and there are bankers involved and legal documents, and they get valued every 6 months or every 12 months. It's a very different pace from an equity market where you are trading same day and settling the next day. Do you see what I mean? So if I've got to do that trade now, and I can trade every minute and fractions of seconds and so on if you're a high frequency trader, and I've got to settle all this stuff tomorrow, by necessity, you build a highly automated processing function. If I've got weeks and months to get that investment done, guess what? It's still on Word documents, and there's lawyers looking at it, and there's people passing through those documents at their leisure. The urgency and the impact isn't there. And now we're seeing these public assets and these private assets come together in the same portfolios, in the same funds, and the level of automation, or the lack of automation in the private space, becomes all the more starkly apparent as a result. And in my prior role, we used to literally get 500,000 statements a year from private equity general partners. Yeah, and it was so acute that we had to build pre-AI, optical character recognition systems to try and read those statements and capital calls and valuations and so on, and try and translate them into something that we could then compare and automate. That changes dramatically when you bring in an LLM, which can just read those documents. It's the same as the fund prospectus example I talked about earlier. We can take a private credit term sheet and turn it into an instrument in the flick of a switch now. We can do the same thing with those GP statements and capital calls and term sheets and so on. So, the private asset market is got one of the biggest opportunity sets for the deployment of AI, and because it hasn't already been through a pre-AI phase of automation, the opportunity is so great, because it's like public assets were before Swift.
You mentioned when we were talking about private markets that it's easier when firms haven't implemented AI.
What I was saying is there's an even greater opportunity to achieve better efficiency, productivity, accuracy in private markets, because they are inherently much less efficient than public markets to start with.
So are you saying then, if firms have not already utilized AI when it comes to private markets, that maybe that's even better place for a firm to start? It's easier for them to start with implementing AI.
Yeah, and it's a great place to start, because there are use cases in private markets that make you much more efficient, much more accurate, and therefore reduce your risk and improve your speed to market. And therefore, the answer, going right back to where we started at the beginning, is, it's less risky to use the AI in that space than to not use it.
So then, and Toby, are there any instances where humans should not be trusting AI?
Yes, absolutely. So if you are just using an LLM as a standalone capability, and you say to it, what's the next best investment I should make, you should absolutely not be trusting that answer. Okay, we're a long way from getting to that kind of point. And so you need to know, and this goes back to being educated and having AI expertise, where you can deploy it, where the good use cases are, how you can train the AI, how you can monitor the development of that AI, and to have the right guardrails in place about the confidence levels that you have. You need to test that AI. You need to have checks and balances around that AI. And that's why we believe that probably the middle and the back office and the operational areas are the place to start, because they are less risky, they are more repetitive, and there's just bigger opportunity for game-changing automation. Ultimately, for AI to start doing things like predicting the right investments, they're going to have a boatload more training and a lot more context than they have.
That sounds
today.
like a regulatory nightmare as well.
And You just took the words right out of my mouth. And so the thing that we haven't talked about, the elephant in the room in terms of the deployment of AI, is that in order to use it to execute tasks without human oversight, you need to have something that is completely permissioned, traceable, and auditable. And so, like, we have a rebalancing agent that rebalances the fund towards its strategic or target asset allocation. I know lots of managers that I won't name who don't perform rebalancing tasks nearly as often as they should because it's so hard to do it, because it's so manual and difficult, and spreadsheets and algorithms and so on. We've built an agent that does that instantly. It would be no use if it wasn't fully permissioned and traceable and auditable, because what happens is you need to be able to turn around to an auditor or a regulator in 6 months' time and they say, why did you rebalance that trade, that portfolio to that standard? And we can now turn around and say, well, first of all, there's the rebalancing agent. It had the permission to do this task within these parameters and for this data. And here is the audit trail of how it reached that decision. It looked at the compliance parameters of the fund and it said you could only have up to 5% in X. And it found that this Y was over 5%. And therefore, it made the decision to sell down the excess percentage. And that all has to be permissioned, traceable, auditable. And that's probably, in the wealth space, it gets even worse. Why did you do that allocation for that private wealth client? If you can't trace that back and the investment didn't go well, you are surely looking at a claim. You need to be able to say, we agreed these risk parameters with the client. Their current portfolio had fallen outside of those risk parameters. We performed this rebalancing exercise in order to bring them back into compliance with their previously agreed risk tolerance, and to be able to demonstrate that trail. And it's much more efficient once you can do that in an agentic AI context rather than trying to do that via paperwork. And if it's done right, it should be more traceable and get to better investment outcomes than humans will today, because it can be done much more frequently and much more accurately.
So how far do you think we are from that happening?
I think we're a lot closer than we realize. And I think the thing with these new game-changing technologies is we're disappointed by the speed of adoption for the first year. It underperforms our expectations, but it outperforms our expectations over a 3 to 5 year period. And again, lots of good history, economic history around that. I remember I sat in the Microsoft AI Center of Excellence about 12 months ago, and they were showing us some really cool stuff. And then they said, "Hey, you want to see the future?" And we're like, "Yeah, show us the future." And they showed us some really cool stuff. And the thing that I remember most was they said, "The future's in 3 months' time."
I was just about to ask that question. That's
I turned to
frightening
my then boss
and
and said, "Yeah,
exciting at the same time.
you wouldn't even get the use case through the risk committee in 6
Yeah,
months, let alone building the
yeah,
future in 3 months."
yeah. That's interesting. Okay, so I also want to touch on something that we spoke about earlier in a prior conversation when we're talking about firms who are saying, "Okay, I get it. I see it. I want to use it. I'm ready to take that risk. Let's go into the unknown." But they're looking at all of these stack systems that you had mentioned, where they're getting data from all these different sources. You had said some firms can be using 30, 40, 50, up to 100 applications. So
Cool.
aside from a firm being able to wrap their head around AI, accept that they need to use it, right? They look at all of those systems and they say, where do I even start? What does that implementation process look like?
Yeah. And it can be so intimidating.
I
And
can imagine.
the bigger the firm, the more applications, the harder the solve. which is sometimes why they start off too small and they end up underwhelmed and disappointed. But and the bigger the firm, the more I can guarantee that they have some pretty bad scar tissue around spending a ton of money on enterprise-wide transformation and data and digital projects that have failed. And so they know that data and digital transformation is the thing that gets them where they need to go, but they also know how hard it is. And that's really a difficult thing. And my advice to them, somewhat through bitter experience, but also through some positive experience as well, is really, number one, don't build it if you can buy it. Okay. If there's something out there that already does it, it's going to be a lot easier to implement that than to create it from scratch. Okay. Then I would say, don't try and boil the whole ocean. Find an area of your business that is particularly suited to that type of transformation, such as private assets. Yeah. And go in there and do it. Okay.
Just start.
And get some positive outcomes. Yeah. And build.
So they don't need to rip out all of those. Right. They don't need to rip out all of those applications to start. They can do it in small steps.
Correct. And that's the thing that, like, almost my number one piece of advice is, like, if you're trying to transform the whole organization at once, I don't want to be anywhere near that, because it's never going to work. You create experience, expertise, knowledge, you get some real business wins out of it. That builds confidence. You build expertise that you can then redeploy to the next project. Word of mouth spreads. You get into a virtuous cycle around this. But yeah, get some experts and go.
Right. It's not, I guess it's not really going into it thinking about like the end game. It's just taking that next step.
Yeah. I mean, in a perfect world, you'd understand this is what my future perfect state looks like.
Right. But I don't need to be there now.
And, but I'm not trying to get there all in one go. I'm just, wow, the bit that gets me the most impactful results in the quickest time right now is this little piece over here. So that's what I'm going to do now. I'm a bit more cynical about that future perfect state, that strategic target operating model for the future, than I used to be, because the tech is changing, and the tech is changing pretty quick. So, I've also seen projects where they start off with that future strategic target operating model, and 10 years later, it's completely redundant because the tech has changed.
But that's a good thing, right? I mean, things are always changing and evolving, and you have to expect that's going to happen with your technology too, and for the better. It's just sometimes change is hard to embrace, or just to start, right? With anything you do, probably. Okay. So then, Toby, if you could sum it up for our listeners, I think you've done a really good job and given us some great advice that they can think about. What is the cost of doing nothing?
You're going to start going backwards at a pretty fast rate of knots, I anticipate. Yeah. And it gets really hard. It's not just, okay, the other firm is doing this stuff better and faster. They're going to be doing it a lot cheaper as well. And we are in a business where margin compression is relentless. It is just a constant challenge to get productive and get productivity results quicker than the price of the product is coming down. And so the only way you get there is through true transformation, data and digital transformation. And so what happens is, if nobody gets there, it's not a problem. If one person gets there, they're going to start winning a lot of business. If 2 or 3 people get there, you're going to be in real trouble, because the price is going to start coming down even faster.
Interesting.
And you're just not going to be profitable.
Okay, so if I could sum up this conversation for our listeners, if you're feeling the cost-cutting pressures and are looking into AI, don't rush it. Don't skip your prep work. Make sure your data is in a good spot, but it doesn't have to be perfect. Don't
And
be
getting your
scared by
data, yeah,
multiple systems, and small steps add up. And the risk of not if the risk of AI using AI outweighs the risk of not using AI.
absolutely. And I'd say one other thing that's really important is AI is not the only part of the solution. Okay.
Mm.
If I get all of my data into a good place, into a single place, and I can start to retire other applications, that's a massive saving for me.
Mm-hmm.
If I get to a single source of truth, so I have a single security master across all of my different accounting databases, I'm going to dramatically reduce my reconciliation points, my errors, my data cleanup, scrubbing, and so on. And these are all necessary first steps to getting your data AI ready. And so the whole thing in the realm will generate massive savings. It's not just the AI. Reducing your application footprint, getting to single source of truth, which are necessary steps to being able to deploy AI. AI really becomes the icing on the cake.
And who doesn't love cake?
Yeah.
Well, thank you, Toby. This was such an interesting conversation. I think that you've helped our listeners immensely. We've talked about some things about AI that we haven't touched on yet. So thank you for joining us today.
Thank you for having me.